Retail stocks have surged, but there are signs that the sector is starting to struggle with a spate of profit downgrades in recent weeks. The opposition's nuclear policy could cost up to $600 billion. And one of the world's greatest athletes has big plans to revolutionise athletics. Welcome to Fear and Greed Daily Business News for people who make their own decisions. It is Monday, the 24th of June, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the share price of some of Australia's biggest retail brands, they've had a great run, really, over the last year, despite the cost of living crisis. But there are a few doubts about whether it can last.
Over the last year, tech stocks have done best, but the next best sub-index of the ASX, alongside the financials, in terms of performance at least, is consumer discretionary stocks, which includes most of the retailers. JB Hi-Fi's share price over the past year is up more than 50%. So too Premier Investments, which owns Peter Alexander, Smiggles and a bunch of other retailers. Breville Group's up about the same amount, while Harvey Norman's jumped 40%. The biggest consumer discretionary retailer is Bunnings, owned by Wesfarmers. That company has many parts to it, but the success of the hardware chain has been a key reason why Wesfarmers' share price is up 40% over the past 12 months. Some of the smaller companies have done even better. Temple & Webster and Universal Stores' share prices have more than doubled since this time last year. Beacon Lighting and Lovisa are both up about 83%. Nick Scali's up about 65%. Can it last? Well, late last week, two retailers, albeit poorly performing retailers over the last year, warned of tough times. Mosaic Brands, which owns Autograph, Nonny B, Rockmans, Rivers and Millers, said it expects a loss this financial year. It blamed inventory and logistical problems. Its share price finished down 12%. It's down about 24% in 2024. And KMD Brands, owner of Kathmandu and Ripcord, warned of weaker sales this financial year as rising living costs hit consumers. Its share price fell 8%. It's off about 50% so far in this calendar year. There have been others, including car parts group Bapcor, Baby Bunting was another, that have downgraded full-year earnings. And City Chic raised $23 million on Friday. That's okay, but it was at a 50% discount to its trading price. That is massive. So we've had this great run. Suddenly we're seeing some companies, some retail companies, just saying things are getting a bit tough.
So what's it mean then, Sean? Is the best over for the retail stocks?
Well, if you're going to invest in retail stocks, go ask a financial planner. That's rule number one. We're not an investment podcast, of course. But if you look at the stock prices of the discretionary retailers generally, they did really well until late March. Then they fell sharply. They've gone up once again over the past month or so. This reflects interest rate expectations, because if rates fall, more money in people's pocket to spend, and that's good for retailers. The smoke in all this is the 1 July tax cuts. They could really help the sector also. But there are certainly companies struggling to find customers at the moment. KMD, Mosaic, Bapcor, Baby Bunting. As we head to the end of the financial year, it's very possible we're going to see more downgrades from some of the retailers who rely heavily on people logging on or walking into a shop and spending. And if we do, it comes after a very strong run for many of the retail stocks.
Sean, seems a very good time to mention our interview that's coming up after the show. You've got a great chat today with Oscar Oberg, who is the small caps analyst at Wilson Asset Management.
So small cap stocks have, well, as Oscar puts it, it's been years. They're supposed to be outperforming the large cap stocks. They just haven't done it yet. Now, it will happen, Oscar says. It's a matter of exactly when. So we talked to him about that, as well as running through, I think there's 3 or 4 of Oscar's favourite stocks to think about if you're interested in investing in small caps.
Yeah, I really enjoy this one because particularly towards the end of the interview, Oscar just rattles off just a company after company after company and his thoughts on those businesses. It is fascinating listening for anyone interested in investing. It is well worth a listen, so stick around for that one. It's coming up after the show. Local markets, Sean, how did they finish up on Friday?
The S&P ASX 200 closed up 0.3% to 7,796 points. For the week, the bourse was up nearly 1%. Commonwealth Bank's share price hit a new record on Friday morning before falling back a touch. It is now just a slither, well, a $4 billion slither, below the value of BHP. Not that long ago, BHP was around 25% bigger than the Commonwealth Bank. But the miners' share price has dropped 15% in 2024. Commonwealth Bank is up 12%. BHP is now valued at $217 billion. Commonwealth Bank at $213 billion. Futures trading suggests the S&P ASX 200 will open slightly lower today.
All right, checking international markets now thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Is everyone still talking about NVIDIA, Sean?
They certainly are. Well, actually, Wall Street ended slightly lower over the weekend. NVIDIA dropped 3%. So, the largest company on Wall Street over the weekend went back to Apple. Apple over NVIDIA. For now, Michael, for now, fear not. I'm sure it'll come back. Anyway, kind of fun to watch.
I'll tell you what, Sean, any listeners who haven't enjoyed, I'll say, the weekend edition of Fear and Greed, it's worth going back and having a listen to it, because the subject of NVIDIA and just how remarkable that story is and its rise and how much it would be worth if you invested $1,000 when it listed back in 1999, all of this kind of stuff. We get across all of that. Very hard to convince our colleague Adam Lang that it's a remarkable story, but you and I agree it is, right?
It is remarkable, no doubt about it.
Yeah, fascinating. Sorry, go on. I've interrupted.
No, that's right. Beyond NVIDIA, Brent crude's up a touch, gold's down a touch. Copper, which is considered a bellwether commodity because it tends to track the performance of the economy, is off nearly 10% since its most recent peak a month ago. Over the past month, expectations of higher for longer rates have risen. That's dented optimism about economic growth. And Michael, the Aussie dollar starts the week buying nearly 66.5 US cents.
All right, Sean, we've got plenty to get through. We'll be back in a moment with the rest of the day's business news. Sean, the coalition's nuclear plan could cost up to $600 billion, yet only supply a small portion of Australia's energy mix by 2050.
That's according to the Smart Energy Council. While the CSIRO has forecast that building 7 reactors would cost $116 billion, the council said that could balloon to $600 billion based on budget and timeline blowouts, the cost of refurbishing coal-fired power stations, and compensating state governments. The nuclear debate is taking much of the spotlight at the moment, or at least the political spotlight. Yesterday, opposition energy spokesperson Ted O'Brien conceded the government wouldn't know all the details of its energy proposal by the next federal election. And former Prime Minister Paul Keating, well, he gave his 2 cents worth. He wrote of Peter Dutton, and I quote, "Only the most wicked and cynical of individuals would foist such a blight on an earnest community like Australia." He then called him a charlatan and a climate change denialist.
Sean, when you were working in newspapers and you've edited newspapers, all this kind of thing, how much did you appreciate someone like Paul Keating because you knew that he would give you a headline?
Yeah, I mean, to be honest, he was sort of before my time, but all the people who are older than me, they all lamented the loss of Keating just because he was so much fun.
But even in retirement, though, you could almost still call him up and he'd still give you a good line, right?
Yeah. He went through a period where he didn't like the media and he didn't talk to them, but in more recent years, he certainly has been out there saying what he thinks.
Oh, was that the case? Was there a bit of a period where he just...
There was a lull, a Paul Keating lull, definitely. But he's in more recent years, he's found his voice again, shall we say.
He's back with a vengeance.
Yes, with a vengeance. That's exactly right.
Now, Sean, there was another drop in the preliminary clearance rate for auctions across the country from 72.9% to 72.4% over the past week.
More than 2,000 homes went to auction. Sydney's preliminary clearance rate came in at under 71%. That was quite a drop. Melbourne was almost 73%. It's been a little while since Melbourne did better than Sydney. Adelaide was 85%, Canberra 76.5%, Brisbane 66%.
Sean, we're closing in rapidly on the end of the financial year. We're in the last week of the financial year, in fact. I feel like that's almost just taken me by surprise. And it looks like superannuation funds will return a very healthy 9% for the financial year.
That's the figure for the median growth fund, with 61 to 80% of in-growth assets, things like equities, that sort of stuff. Over the month of May, the median growth fund expanded by just under 1%, and fiscal 2024 will represent the 13th positive return in the past 15 years, according to Chant West. Given the uncertainty around inflation and interest rates and the geopolitical climate, 9% return's pretty good. International share markets have driven those returns since the introduction of compulsory superannuation. The median growth fund has returned 7.9% per annum. Think about that. The annual CPI increase over the same period was 2.7%. So the difference between the 7.9, 2.7, 5.2%, that's the real return per annum, well above what superannuation funds typically target. Chantwest then considered the past 20 years, which includes three major share market downturns, the GFC in 2007-2008, COVID-19, and then the high inflation, rising interest rates of 2022. Even in those 2 decades, super funds have returned 7.3% per annum, which is still comfortably ahead of the typical objective of a super fund. Done pretty well over the last 20 years and even better since compulsory superannuation was introduced.
Yeah, absolutely. Now, it isn't often you get the heads of News Corp in Australia, Nine Entertainment and Seven West Media just sitting together, nodding their heads, Sean, it must be said, in furious agreement. But it happened on Friday at an inquiry into the behaviour of the social media giants, the common enemy.
Yes, it sure did. News' Michael Miller, Nine's Mike Sneesby and Seven West's Jeffrey Howard appeared in unison at the parliamentary inquiry, which is looking at the influence and impact of social media on Australian society. As you mentioned it, there was furious agreement between the three on the need to clamp down on harmful content online and questions about Meta's decision to walk away from paying Australian media companies. The gist of the argument is that the big media companies are regulated, but the internet is not. As Mr. Miller put it, and I quote, "Social media has become a toxic force in our society with online scams and blackmail, cyberbullying and trolling, deepfakes and political interference." He added that Meta, owner of Facebook and Instagram, was preparing to blackmail both the legacy media industry and the government. Mr. Sneesby also warned of job losses if commercial arrangements weren't adhered to.
Sean, the northern summer is upon us and many Australians are gearing up to travel to Europe. New data shows that among the major countries, Italy is where Australians are most likely to have insurance claims.
Yeah, so Medibank data shows that customers made more claims in Italy than anywhere else. UK, Greece, France, Spain. The most common issues related to medical episodes, hospital stays, and stolen or lost luggage and personal effects. Department of Foreign Affairs and Trade statistics show Italy was also where more Australian passports went astray than anywhere else in the world, according to a story in The Australian. According to Medibank, the two highest travel insurance claims made by Australians in Europe last year were in Italy. One was for $67,000, the other $42,000. Average claim is about $1,500. I suppose it's not that much of a surprise because Italy really is a hot tourist spot for Australians. Last northern summer, 131,000 Aussies made short-term visits to Italy, well above the pre-COVID level of 106,000.
Thousands of CFMEU members in Melbourne have endorsed a new pattern pay deal that delivers 21% in wage rises over 4 years, reinstates a host of conditions scrapped under the Coalition's building code, and allows union officials to enter sites without a legal permit if they have agreement of the employer.
The 4 annual 5% pay rises will apply a month earlier each year under a back pay clause in the agreement that also locks in a 36-hour week, existing rostered days off, monthly paid union meetings, and increases in funeral coverage from $9,000 to $15,000, according to media reports. The agreement reinstates previously banned content under the building code, including clauses requiring employers to convert casuals to permanent employment, limit the use of labour hire, and ratios to employ a minimum number of apprentices. Addressing the meeting, Victorian CFMEU Construction Secretary John Setka last week said he was sick of criticism that construction workers were overpaid, defending the $200,000 plus a year pay of traffic controllers, who he said did a dangerous job.
Okay, turning to international news now. I mentioned this one at the top of the show. Sean, one of the greatest short distance runners ever, US Olympic champion Michael Johnson, wants to revolutionise athletics. And he's unveiled a new competition to elevate elite athletes and athletics.
It's called Grand Slam Track. It's scheduled to start next year. There'll be 4 Grand Slams, 2 in the US, 2 outside the US. It'll be backed by about $30 million of commitments from investors, including money from the business of hedge fund billionaire Bill Ackman. Johnson told the Financial Times that the competition was built for today's audience, and each athlete will compete twice at each slam event. Johnson said fans want to see athletes more than once at a track meet. Couldn't agree more. Great to wait for Usain Bolt, but, if you duck out to get a cup of tea and the race is over, that's it. So he wants them to compete at least twice at the same event. Already some Olympic athletes have said they'll be joining the group. Under the proposal, there'll be 48 paid races earning a minimum fee and 48 challenges. World Athletics earlier this month revealed plans to set up a new biennial competition from 2026. Athletics like swimming and cycling has a huge fan base, but really limited opportunities for people to attend events and to see the best track and field athletes. So a little bit like Live Golf has attempted to do in that sport. This is a way of bringing the best athletes to more people.
Huh, I think it's a great idea. Good luck to him. That would be fantastic if it really kind of pumped a bit of money in and got people really engaged with it.
Absolutely. I think the track and field events at the Olympics, which are on next month, I think they're almost the best of the lot.
Yeah. No, I actually completely agree with you. Somewhere where we don't agree, Sean, is on this next story. It's a bit of an update, really, on a story from a few weeks ago. The members of Queen have reportedly sold the rights to their music for £1 billion, that's B, billion pounds. That's a new record for a rock band.
Sony have bought the rights from the 3 surviving members in the estate of Freddie Mercury, according to Variety, but it's a complicated deal. For example, all 4 members of the band wrote a number 1 hit. So normally, sometimes the rights get split up depending on who's done the writing of the number 1 hits. Well, they've all wrote number 1 hits. North American rights are still with Disney. 2 of the original members, Sir Brian May and Roger Taylor, are still touring with Adam Lambert singing. So it's very convoluted, but it looks like they did sell the rights to their music for a record £1 billion. Well deserved, Michael, that Queen should be getting more than anyone else. Would you agree?
Oh, look, it's well deserved until such time as Barry Gibb decides to sell the Bee Gees. Incredible catalogue. Then I think, look, you know what? Just guessing, we'd be somewhere in the $2 to $3 billion range. I mean,
you reckon? Yeah.
I mean, he should be. Nah. That man is a hit maker, not just for him, but for Barry everyone Gibb. Else. Yep.
Oh, Michael.
Sean, you don't agree with? Fine, that's right. We will continue this debate some other time, perhaps on the next edition of the Weekend Edition, which is coming up in only 5 days' time. I'm looking forward to it. Up next is the Fear and Greed Daily Interview. Oscar Oberg from Wilson Asset Management is your guest today.
All about investing in small caps, smaller companies, why it hasn't been that successful in the last kind of few years, but Oscar's very confident that it will be successful. He even gives us some tips about what he's going to invest in or interested in investing in.
Yeah, it is coming up in the Fear and Greed playlist. Before that, though, is Fear and Greed the Week Ahead, featuring Stephen Koukoulas, our resident economist.
Yep, sure are. Stephen's very excited this week about the monthly inflation figures due out. We all know that interest rate decisions will be based very much on what's happening to price rises. So while it's only a monthly figure, it's enough certainly to get Stephen excited.
Yeah, sure is. So plenty of good listening coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for the free weekly newsletter, which comes out on Wednesday morning. So head along to the website, pop your email address in, and you will get that newsletter in your inbox about 11 o'clock or so on Wednesday morning. Thank you, Sean.
Thank you, Michael.
It is Monday, the 24th of June, 2024. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.